Hey there, savvy investors, and welcome back to the channel where we demystify the markets. Today, we're diving deep into a fascinating corner of the stock market, hard to borrow stocks and the mechanics behind a potential short squeeze. Our focus today is specifically on VEEE, Twin V Parkat's company, a name that's been flashing bright on our hard to borrow screener. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what exactly is VEEE, Twin V Parkat's company? Show company logo / B roll of boats. This is a company in the consumer cyclical / recreational vehicle sector. They design, manufacture, and market recreational and commercial power boats, offering catamaran boats, dual-hull vessels, and Bahama boat works under the Twin V brand, alongside V-hull boats under the AquaSport brand. Essentially, they build boats for everything from fishing to leisure. With the current market cap sitting around $15.06 million, VEEE is firmly in the microcap territory, which often comes with its own set of unique market dynamics. What's cost to borrow and why it matters? Before we get into why VEEE caught our eye, let's quickly explain one of the most critical metrics, cost to borrow, or CTB. When you want to short a stock, you're essentially borrowing shares from a broker and selling them, hoping to buy them back later at a lower price for a profit. The CTB is the annualized fee your broker charges you for borrowing those shares. Think of it like a rental fee. When a stock becomes highly sought after by short sellers, or if there are very few shares available to lend, that fee can skyrocket. A CTB fee over 100% annually means it's extremely expensive to hold a short position for a full year. Why this stock is hard to borrow right now. Now, let's talk about VEEE. This stock appeared on our hard to borrow screener for some truly eye-popping reasons. Its cost to borrow fee is currently an astonishing 931.2% annualized. Highlight 931.2%, that's not a typo. To put that in perspective, this fee has seen incredible momentum, increasing by a staggering 833 percentage points over just the last 5 trading days. This kind of rapid increase is a huge red flag for short sellers. What's more, the shares currently available to borrow are incredibly scarce. We're talking about just 5,000 shares. When you consider VEEE's estimated float is around 0.4 million shares, having only 5,000 shares left to borrow means that new short sellers can't easily jump in, and existing short sellers are in a very tight spot. Our internal composite squeeze score, which factors in CTB level, momentum, shrinking supply, float size, and technicals, currently rates VEEE at 69.5 out of 100. That's a significant score for a potential squeeze candidate. Squeeze mechanics explained. So, what does it mean when a stock like Twin V Parkat's is hard to borrow with such high fees? It means that short sellers who are betting against VEEE are paying a premium every single day to maintain their positions. If the stock price starts to rise, these short sellers begin to lose money, and those high borrow fees only exacerbate their losses. At a certain point, many will be forced to cover their shorts, which means buying back shares in the open market to return them to the lender. This buying pressure, especially when the supply of shares is low, like only 5,000 shares available for VEEE, can act like rocket fuel, pushing the price even higher and forcing more short sellers to cover. That's the core mechanic of a short squeeze. However, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have very strong conviction that the stock price will eventually fall, and they are willing to pay those exorbitant fees because they believe their bearish thesis will ultimately play out. Dilution risk check. One critical factor to always consider when looking at potential short squeezes, especially in microcaps like Twin V Parkat's, is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding. While it can raise capital for the company, it also reduces the ownership percentage of existing shareholders and can put downward pressure on the stock price. This can significantly offset or even negate a short squeeze thesis, even if the cost to borrow is sky high. The good news for VEEE, as of our latest checks, is that we found no recent dilutive SEC filings like SMINUS1, SMINUS3, or 424B in the last 90 days. We also found no recent reverse splits for VEEE in our look-back window, which can sometimes precede or facilitate dilution. This absence of recent dilution is a positive sign for the squeeze thesis, as it means fewer new shares are likely to hit the market from the company itself. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's look at VEEE's recent price action. The stock has been highly volatile. Today, it saw a significant drop of minus 23.80%, and over the last 5 days, it's down minus 23.42%. To chart with price action, however, zoom out to the last 30 days, and you'll see a truly explosive move. VEEE is up a massive plus 402.39%. This suggests significant interest in price swings. Volume is also a key indicator. Today's volume was 1,432,800 shares. This is quite a bit lower than its 30-day average volume of 4,381,793 shares, giving it a relative volume of only 0.3x average. This lower relative volume on a down day might indicate reduced buying interest or a lack of strong conviction from sellers at this moment, but it's important context for any potential future moves. Traders eyeing VEEE will be watching for increasing volume on upward price action, which could signal short covering, as well as continued tightness in the borrowable shares and any further spikes in the CTB. In summary, VEEE Power Cuts Company, or VEEE, with its recreational vehicle sector focus, has landed squarely on our hard-to-borrow radar thanks to its sky-high 931.2% cost to borrow, and an extremely limited supply of just 5,000 shares available to short. While the stock has seen some recent pullbacks, its 30-day performance shows it's capable of dramatic moves. Remember, trading highly volatile microcaps with high CTB involves significant risk. Always do your own thorough research. If you found this deep dive into VEEE and hard-to-borrow stocks helpful, please hit that like button, subscribe for more educational content, and let us know in the comments if there are any other stocks you want us to analyze.